Welcome everyone to today's webinar, How Advisors and Accountants Can Double Profits in 2025. I'm Dr. Jackie Meyer, CPA and President of TaxPlanIQ. We're so thrilled you can join us. I know it's a very busy time of year for the accounting side of things. And that's something that maybe we'll touch on today is how financial advisors can help out with that. But I'm here with my co-host, Anton Anderson, CEO of Elite Resource Team. And Anton, are you ready to share your slides or would you like me to do
I
that?
would be happy to. I see the participant number climbing quickly. So welcome everybody. We'll give you just a moment to jump on in here. And you are more than welcome to type in the chat box. Let us know that you're live with us, where you're joining us from. We are excited to see y'all. Y'all, Jackie, you influenced me. Y'all's never come out of this Southern California boy's mouth before. Look at this.
It
We are
sure has
truly
it.
co-hosting.
Look at
This is
me.
collaborating and we haven't even begun yet. Great to be on with everyone. Jackie and I did a podcast once and had a blast, and so I'm looking forward to the energy today. Give me an idea. Can you see the how advisors and accountants can double profit in 2025?
I
All right,
can.
perfect. Very good. Very good. In that case, Jackie, I'll let you kind of give a little more background on yourself and we'll rock and roll.
Perfect. Let's see. We're 2 minutes in. Okay. Let's go for it. So, I'd like to share just a quick little bit about my background if you're not familiar with me. I'm a CPA by trade. I spent 12 years running my own accounting firm, growing it to nearly seven figures, 1 million in revenue. The pivotal moment, though, for my business was really shifting from compliance only model to fully embracing strategic advisory services and what I call leading with tax advisory. So, tax planning was a huge component of that. And that evolution was really fueled by collaborations with financial advisors, estate attorneys, holistic family office professionals. And it was that journey that inspired me to actually create TaxPlanIQ. And then we'll talk more about how Anton and I came together, but we both share a passion around collaboration. And we've been working together almost a year now. And that's why we brought this session together. So, Anton, let me hand it off to you to introduce yourself.
Thank you very much. And as I was prepping some thoughts this morning, Jackie, before I introduce myself, I did just want to comment on one of the reasons why I so enjoy our relationship over the last year or 2 years and the collaboration with you is just because of how genuine you are. And so the fact that you just
Aw,
touched on the passion piece of it to me is everything. I mean, you have the experience and incredibly intelligent and entrepreneurial, but the passion you have and how genuine you are really excites me for this journey that we are all on together.
thank you so much.
My genuine pleasure. Okay. And then in terms of background for myself, so Jackie has the CPA side of this conversation. Mine's on the financial advisory side. So I started at Smith Barney and I left there. I joined a smaller boutique firm that focused on high net worth individuals. I don't even know if the term multifamily office, certainly not virtual family office, was around then, but that's essentially what we started forming to really service high net worth individuals and business owners. And that firm shut its doors in 2008. So I broke off, started my own practice, and slowly grew that firm. Really was motivated by this idea of collaboration and working together. There's just a lot of bumps along the way. So made 100 grand or so for the first few years until it started really clicking with the collaboration aspect. It wasn't the trading referrals or the outdated model that represents. It was really more finding people like Jackie. If I was in practice, Jackie and I, at least I think, would have been incredible collaboration partners. It's people that you,
I wish we could, you
right?
could have been my partner back then
Can
because
we just rewind and run our firms? Yeah, that would be so much fun.
yeah.
But genuinely, it's really it's people that I really clicked with, created a lot of synergy in our strengths, and enjoyed working with. And so it was primarily CPAs and EAs. And I remember the first introduction I got from a CPA's client, and it was incredible. We helped the client in multiple different ways, but I made more from that one client than I had made the entire prior year. And so I just realized this concept of collaboration, truly forming more of this holistic family office type of experience was not only what people wanted, but where, going back, Jackie, I'm going to use your word, where my passion was. It was just such a more enjoyable way to serve clients and to build a business and to earn a living. So in 2014, I started hearing some interest from other advisors to show them how I had developed those relationships with CPAs. And so co-founded Elite Resource Team just over 10 years ago. And the mission was the same then as it is now. We help advisors leverage a virtual family office and form more, I'd say, profitable and sustainable, enjoyable partnerships with accountants. So in terms of why we're here, look at that great photo of Jackie and I in San Diego last summer. In terms of why we are here today, we went through a couple different iterations of this conversation. And ultimately, we landed upon, for the next 55 minutes, really just sharing with you a little bit of our own experience, but spending the majority of the time inviting two advisors and two accountants on to do more of an open panel discussion with us. So Jackie and I saw one of the questions that came up in the chat or the slides already a couple times is, how can I get the slides from today? We're happy to share them with you, but there actually won't be that many slides. And what we thought would be more powerful is not to pitch anything, not to give you a long deck, but really just to kind of pull back the curtain, be incredibly transparent about what is it like to truly form these types of collaborative relationships and to offer more of this virtual family office experience to clients and to hear it from the two partnerships that we have on with us today. So that's what we'll get into momentarily. And the purpose, or who we believe we're speaking to, is you're here because you're firm in your life. You want to do better. You want to change for the better. You want to evolve. There's a better way. You also know that it's possible and have seen other people do it. And you're just maybe not sure exactly where to start. Or perhaps you've started and you've tried to work with advisors before and you're a CPA, or you've tried to work with CPAs before and you're an advisor. Maybe it didn't work that well, or maybe it's worked okay, but it just really hasn't fully clicked into a next gear. I think, and I'm pretty sure Jackie would back me up in this, the time is now. Like there's never been a better time between technology, how concerned people are with how many moving pieces and how fast things are growing and moving and changing. Outsourcing, compliance-based work it's getting less and less valuable. So ideally, we can help have a conversation around reducing just the number of hours that the CPAs are working primarily during busy season, reduce that feeling that both of us, the advisors and the accountants, have of that kind of that race to the bottom to offer a commoditized service or product, working in our own individual silos and spending a ton on marketing to find high net worth clients. That's probably most applicable to the advisors on the call. And one bullet point we didn't have, what's coming up as I'm thinking about this, is a lot of the community members that we've had a chance to work with over the last decade will say, you know what, I was just burnt out of the traditional way that things were done. It just didn't feel right to me. And as soon as they really opened up their eyes and were more willing to consider a different way of doing it, they go, that feels right. I want to actually be able to collaborate and offer more value and work with better clients and not just focus so much on sales or focus on putting the right numbers in the right boxes, but really make a difference, solve problems, solve big problems. So that's primarily why we are here today. Welcome to everybody. I've seen a ton of additional chat now in the chat box in terms of where people are joining us from. So we're excited to see all across the US here today. And to introduce our panel members, I will start with Sterling Hirsch from Collective VFO and Alan Barber from Alan C. Barber and Associates. Sorry, the bottom is cut off for me, but Alan and Sterling came together and collaborated. We'll get into their background. And then the second partnership here today is Stephen Cox and Missy Dennis, CPA. And so with that said, let me go ahead and stop my screen share because we don't need to be looking at slides the whole time, and instead just kind of welcome our four panel members to the stage here. And what we'll do is we have a couple questions that we think would be interesting for them to cover. And then we'll open it up for questions from everybody on here today. So go ahead and type questions that come in. as we are live, and we'll do our best to get to everything today. So just in terms of background, Stephen and Alan, I'm going to start with you guys because you were in the slides first. Sterling, if you don't, Stephen and Alan, Sterling and Alan, Sterling, if you don't mind introducing yourself first, and then we'll have Alan introduce himself from there.
Great to be here. It's an exciting time in our industries, and I feel privileged to be able to share this webinar with Jackie and Anton, Missy and Dennis, and my strategic partner, Alan Barber. We're having a lot of fun together. I'm in Southern California, Inland Empire, and gosh, I've been in the industry, owned several other businesses before I got into the financial services business. One of the biggest challenges for me, being a business partner, owned some pest control companies. I actually built and sold those. Had a partner, had really good strategic, partnership. And then I got into the financial services industry transition. And I struggled with partnerships in this industry as a financial advisor. It's just a really unique, mission-driven industry, and so that was a real challenge for me. When I found the model that I utilized and I started implementing back in 2019, and I've known Anton and been part of the mastermind group of the Elite Resource team, when I found it, I was like, I say this all the time, I drunk the Kool-Aid, right? That's my, I said, I'm all in. And so I dove in, and I've been working on just building a foundation in my practice ever since then, foregoing seminars, foregoing any other type of lead gen, and just worked on this model. Of course, I had to feed the family and work my business, but I'm so glad that I really spent the time to build it, and being able to build strategic partners with guys like Alan and other professionals. It's just been a really fun transition for me.
Oh man, appreciate the words. Alan, let's hear from you in terms of background and maybe how you and Sterling came together.
Certainly, I'm Alan Barber, CPA in Hendersonville, North Carolina. We're located between Asheville, North Carolina, and Greenville, South Carolina. I've just been here for 4 years, but I was born and raised in Atlanta, Georgia, and had a firm down there. And my wife and I, we escaped Atlanta to 4 years ago to come up here. My family is from Hendersonville, and so found a firm up here and purchased it, and still have clients in Atlanta, but my main my main headquarters is here. I've been a CPA for over 35 years, and most of that time in solo practice. And also I've been licensed for securities for probably 20 years, but for all those years I knew what to do for my clients, but with all the challenges of a small firm, was never able to deliver it in a efficient way. And when I had been hearing about Elite Resource Group for several years, and finally took the plunge and went to the San Diego meeting last summer, and we met with Anton and his group, and was able to meet Sterling and other financial advisors. And I finally found, I thought, and what has been confirmed since then, I found the way to deliver financial products, but more in a way, in a structured way, and which would fall right into what I was trying to do in the tax practice for so many years. And so that's what's been a great thing for me and for my practice, and then working with Sterling on several of his clients, my clients. The key for me with Elite Resource Group and the resources that Elite brings together is the structure of the virtual family office and the ability to be intentional with clients. I'm not sending clients across town to a financial advisor that I'm not sure what's going to happen when they get there. Sterling and I work together with clients. We have a structured meeting, structured meetings with them, and that's the key. And then with TaxPlanIQ, the things in my mind that I knew that I could deliver to the client. Well, hey, TaxPlanIQ, you flow the tax information into the system, and it prints out those things. Yeah, hey, I was thinking about that. Yeah, well, I didn't know about that, but that's been a great, an incredible resource for me in my tax practice. So
Love it already. Yeah. I mean, if I'm taking notes, I'm thinking, so they're already talking about how they've been working together virtually. So get rid of the idea that you have to be necessarily in the same town together. That opens up the entire country. And then, Alan, it's interesting you referenced the CPA background and securities license. So get rid of the idea that anybody on here would be worried if their potential partner in collaboration has some similar licenses or background or anything. It's not about that. It's about what you said was having a process and a team and the tools to be able to actually execute on what you maybe wanted to, just didn't have
absolutely.
the ability to in the past. Cool. And we are going to, the title obviously was how to double your profit in 2025. And so we'll be weaving that through and asking them as well how they've helped clients, how it's impacted their profit. But first, let's get through the second part of the introductions. Stephen, if you don't mind starting there, and then Missy will jump to you.
Sure, yeah. As Sterling and Alan both said, it's great to be here. Normally, and Missy can attest to this, I don't do much in the way of background, but after those several minute background stories, I guess I'm going to have to expand on what I would normally say. But I'll still try to keep this kind of all in line. So I guess you could say I kind of got stolen from the bioengineering department at the University of Utah nearby. I was studying there, and then I started working with a now business partner of mine who was focused on comprehensive financial planning as a separate securities from investment management. So I emphasize that because some financial advisors really sell investments, and then they include planning as if it's not very important on the side of their investment management process. And we've always charged a separate fee as a separate service for financial planning because we want to emphasize that it is important. We don't have to manage all of your money in order to be able to do it. And there's enough meat on the bone to do it properly that we should be getting paid for it as well. So that was the environment that I came into. We were doing retirement planning seminars at local colleges and universities. That was kind of the nature of our business at the time. And then I got exposed to the concept of exit planning for business owners and realized the parallel there where for most business owners, their exit planning is really like the equivalent of retirement planning for an employee, except the employees in the financial advisory space are very well served. There's financial advisors everywhere. The entrepreneurs, the business owners, usually don't want to talk to those financial advisors. And most of them are not really preparing their businesses for exit. That helped me understand the importance of having a team around a business owner and the need for proactivity with the business owner so that we could plan in advance, prepare the business, prepare them, prepare their personal financial situation for a business exit. And that was a springboard into now this virtual family office context of taking that team-based approach, but not only for exit planning for business owners and the tax consequences of a business exit, but moving that downstream and saying anyone in the life cycle of being in a high income situation or being a business owner, especially if you've actually got a business with an enterprise value, anyone in that situation is probably highly underserved already with their current advisory team. And at least, even if they have good professionals they're working with, there's probably gaps in the team. And there's probably no collaboration or a culmination of kind of the bringing of these different disciplines together. And so that led me to Elite Resource Team, to the virtual family office model, and then subsequently to Missy and I partnering together to start to provide more of a team-based approach for business owners and other people with tax planning needs that has been very fruitful for our practice and has also paved the way for me to say, as Sterling said, no more workshops, no more seminars. Why don't we work with people that we already have a relationship with that are getting underserved by the traditional market and carve out a new space for us in the industry and solve problems that no one else is stepping up to solve?
Love it. Couldn't have said it better myself. Wow. Missy, would love to hear from you.
I know I got to follow up with Stephen, right? I'm a little more short-winded than all three of these guys, so mine will be pretty quick. Been doing taxes for 20 plus years. Basically worked for the same partner for those 20 years. I became a partner 2018. So, you know, I love working with Stephen because typically us as CPAs, again, kind of like Alan mentioned, with the amount of clients that we have, a lot of times we were more reactive than proactive. So CPAs are now trying to flip that script and become more proactive. And that's really where Stephen comes into play, because he's, you know, looking to find all these different strategies and not just for taxes, but just to set the client up for the future as well. So Stephen, what have we been a little about a year and a half or so? I think we've been working with him, and he's one of the financial advisors, smartest financial advisors when it comes to tax planning and figuring all that out. Sometimes financial advisors say, yeah, I can do tax planning, but they really don't understand it. Stephen understands that. So it's very easy to work with Stephen because he almost understands the tax code probably better than I do. Not really, but he's up there. So the stuff I've learned with Stephen the past year and a half has, you know, not only grown my my knowledge, but also been able to pass that along to our clients. And TaxPlanIQ, we started using it last fall, and it's a great tool because it does show your client, you know, ROIs. Because a lot of times clients don't want to pay for that tax planning because they don't see the value add in it. And that's definitely something that TaxPlanIQ will give you that. So that's my story.
Awesome. Awesome. Thank you, Missy. Okay. So we've got a lot of chatter already. I'm going to ask you our first or second question. I'm not sure where we're at in this list, but this is an exciting one. So you have collectively saved clients hundreds of thousands of dollars already, if not millions of dollars in tax savings through your work together. In doing so, was this a new revenue stream, or was it something you're already doing and then the collaboration just accelerated it? And I mean, this is a loaded question, but kind of get us to that point of how did you achieve that together? So let's start with Sterling.
So Alan and I, for 2024 returns, officially have saved clients over $2 million in tax.
Congrats.
This is absolutely new revenue stream. The actual how did we get to that point? Is that the question?
Yeah.
You know, Stephen really kind of, you know, talked a little bit about the lack of collaboration, lack of coordination, the needs that are not being met, right? And typically this is successful business owners that we're and sometimes just high income, high net worth clients, right? This can be applied to a lot of different clients, but at the high end, we certainly want to bring value to our best clients. And so when we focus on those clients, we're able to do with the model that's been, you know, taught to me, and I've been, you know, implementing foundationally my practice for, like I said, you know, gosh, it's been 5-6 years now. I've been able to build out processes and be able to help Alan and I build a process together that is, we call it a proactive planning process. And that planning process, it doesn't have to focus on tax. In fact, it's best, I believe, if we start with an engagement agreement with a client where they understand that we are going to focus on their priorities. And as we do that, we run a diagnostics. We have a great system that's very structured. As we work together, we learn that system together, we're able to really uncover all stones, because when we have both of us doing this together, we have different perspectives. And as we run this diagnostics process through this model, this virtual family office proactive planning process model, we uncover all stones, and then we help the clients to understand what's under those stones. But then we also, as we help them understand it, we prioritize their needs and what do they really want us to focus on. And of course, tax is typically at the top of the list, right? If there's a reduction need, that's where we're going to focus, but there could be business advisory, like Stephen mentioned. There could be there could be legacy planning, estate planning, there could be risk mitigation, there could be wealth management. So all these things we talk about, but then we put together an engagement process, and we engage as what we call a planning team. We couple that with a virtual family office of about 75 national specialists, and those specialists are going to fall under all those areas I've mentioned. So we get to work as a team. We address all their concerns, and when tax, best if we get going earlier in the year, right? So that we can be efficient and effective to start preparing for tax reduction strategies. And that's when we bring TaxPlanIQ, and that we started using as well this past fall, where it has just completely changed the game. Because when we can deliver an analysis that shows the actual ROI for those, compliance-driven solutions, along with advanced tax strategies, and we show it and they see it, and then we show them the implementation fee for us to help them with those strategies. It's like, why wouldn't we do this, right? It makes absolute sense, and it's just an easy way to help clients move forward. But then we're able to tackle all their priorities in that process. So that's, I think I've answered that question.
Yeah, for sure. I'd say instead of going kind of one by one, is there someone in particular that kind of wants to add to that thinks that they've got a good secondary perspective? Are you good on that one, Alan? How are you feeling?
Adding to what Sterling was saying, we had a client, my client, that we were working together on, and we were going through the process. And I've worked with these clients for at least 5 years, and this process uncovered some things that I didn't even know about. I didn't know that they had these certain goals or aspirations, and so the process is so valuable, and the clients appreciate it too, because it's not just me doing a tax return. Here it is, sign it, we e-file it, hey, we're done. It's more than that, and again, it's always been, I tell my clients, hey, I'm available all year long. If you have a question, give me a call. But most times I don't, unless I see them once a month, then that's all that's all the communication that occurs. But with the elite resource team, with the structure, again, I go back to the structure. We set appointments with the client, we meet with them, and that uncovers not only tax planning opportunities, but other things that are important to them that you wouldn't have otherwise in that focused time with the client.
I'm glad you mentioned that, because when Sterling was talking about working with all these different professionals and whatnot, that might have been a little overwhelming to someone watching, but it's all templatized, if that's a word, through the ERT system. And then the TaxPlanIQ side puts it in the software for the visualization for the client. And so we're not talking about them recreating the wheel here by any means. Stephen and Missy, y'all want to talk a little bit about kind of how much have you saved your clients in taxes so far, and what that's looked like?
Steven, you want to?
I had a little bit of advantage. Anton sent me a text this morning while I was at the gym saying, how much do you think you've done? So I did a little bit of so a lot of the stuff that Missy and I did were what I would call advanced strategies. And we were careful to want to put in all of the cash flow items, the cost for the strategies or contribution amounts, as part of what we were modeling in TaxPlanIQ. So the net number that I gave to Anton this morning was probably, I was guessing, Missy, somewhere between maybe 250 and 300,000 of net tax savings. The gross, I estimated to be probably 2.5 times or more than that, depending on the way that we modeled it. And in our relationship dynamic, Jackie, I was thinking about how you were describing kind of tactically how that worked. So just to kind of give some life cycle perspective, typically, I almost described myself like a bird dog yesterday. I kind of go and find strategies. I evaluate strategies. Then Missy and I did joint due diligence. Then when it came to actually delivering on a tax plan, Missy would run tax projections, because my engineering background says I want to be pretty precise, maybe to a fault. So Missy would run the tax projection. She would run out different scenarios. I would put that into TaxPlanIQ. We would go over the proposal together. Missy, assuming that she had a strong relationship with the client, would typically sell based on the proposal or cite the fee. And then she would turn it over to me to give the client an idea at a high level of what the strategies were. We would then close the sale and then move on to meeting with the experts who would take over kind of the deeper dive into each of the strategies. And so that was the dynamic that we ended up kind of playing out over the course of both pre-tax season due diligence and then during tax season, the dynamic that we followed to try to deliver this at as much scale as we could for the client.
Awesome. Missy, anything to add to that?
Yeah, I think, the biggest hurdle, it may be in other states, but Utah, our biggest hurdle is the fees associated with this kind of stuff. Again, they're like, wait, I paid you for a tax return. Why do I have to pay you for tax planning? So again, going back to Stephen, is being able to show your client, yeah, you're going to put this much money out, but you're going to save, X amount of dollars in taxes, even though you're going to pay us a fee. The net of it, you're still saving, quite a bit of money. So it is a hurdle that we kind of battle, like I said, in Utah. Like I said, it could be like that in other states, but seems a pretty big one here, just because of our culture. So I don't know if you guys fight that as well.
We saw a lot of chatter already in the chat about that, and so definitely want to get to that, but I'm going to let Anton go with the next question, and then I've got plenty more for you. So maybe this should have been a 5-hour webinar. I don't know.
I do as well. I'm getting the notes to make sure we get through our questions, and I'm seeing all the questions come through the chat where I'm like, oh, that's a good question.
Yeah.
Darlene, that's a good one. I think we should do that. So
Missy and I need to get back to doing tax returns. Come on.
Oh, I'm gonna piggyback on something Missy said, and Missy, this might be the first time I've ever heard this word come from a CPA in this context, and I like it because you're like the more concise version and also like very even keel, and then you drop the love word in there. You said, I love working with Stephen. So that if anybody didn't pick up on that, that draws a direct comparison to like a referral relationship or something that the industry typically I think sees. And I feel that love between, all four of you really. And my question was going to be, and Missy, if you don't mind me putting you on the spot first, and anybody can add to it, but from your perspective, what are the dynamics of a relationship between an advisor and accountant that make it work well? Where does that love word come from?
Where does it again, with Stephen, I work, CPAs have probably 20 financial advisors that they work with. And again, they think they understand the tax code, but at the end of the day, they, as financial advising, I know the Cliff Notes version, I'll let Stephen do that, but I've never seen a financial advisor like Stephen that knows taxes as well as he does, which makes it easier for me to not only present him to my clients, but the confidence in him as well is through the roof, because I know he knows his stuff, and he's always going out and learning more to bring to my clients, right? He's doing all the grunt work and bringing in all the strategies to me to then say, yeah, let's go ahead, let's present this to these batches of clients or whatever. Does that kind of answer your question?
It does. So part of it is exposure and education, which, Stephen, am I going out on a limb to suggest that between ERT and TaxPlanIQ, we've helped educate you a bit on some of the tax strategies and done some of that work with you?
Vastly, yes.
All right. And then Missy, maybe you could speak to, in addition to the education and information, what about on the soft skills side, we'll say, either about dynamic in terms of personality or process tools, anything else you would speak to there?
Again, I think Alan hit on this. You do a client's return, but you don't know exactly everything that they have. So when you do the CIQ with Stephen, you actually learn even more about your client and what else they have. You may not know they have this land sitting up somewhere that's undeveloped. You just might not know it because we're not getting into the weeds with our client. Right now we're just trying to get stuff done. We're just trying to get stuff done. So going back to those clients and really learning what exactly they have with Stephen has been great too.
Good. So if I'm listening right now, I would think an understanding of what it's like to walk in the other person's shoes, right? A base understanding of the, in this scenario, tax planning, and reverse, you said your Cliff Notes versions of financial planning. So we kind of understand how the Venn diagrams work together. And then also being willing to put ego aside and do some of the work to kind of come together and collaborate. You said Stephen's willing to do a lot, not just kind of come in and say, where are the clients I can sell product to, but actually to do a lot of education and bring that to you for the two of you to collaborate before you try to get in front of any client.
100%. Yep.
Good. Alan, Sterling, anything you guys would add before I'll let Jackie jump to another question?
I was going
Dynamics of it.
I was going to add that, you know, part of just being able to work together is being able to make sure that everyone's comfortable and unified, that we are speaking each other's language, and that we understand where we're both coming from and what's important to us as a partnership, right? So part of that means that I can't assume that Alan even knows how to talk to a client about the virtual family office and the proactive planning process. We actually work together on scripting, on role playing, on preparation for meetings, making sure we're on the same page. Because if we don't do that, we get to a client meeting, you know, building out the model, not just the model that we're taught through ERT, through the proactive planning process model, BFO, but how we take that and apply it. It's not about recreating the wheel. It's about where are you at in your practice, Alan, and how do we build on that? How do we make sure that this is delivered in a way that's best for all of us and best for.
Love it.
So something I think too that has changed the game for me is that we as CPAs, I mean in my case especially, I get so busy doing the tax work and you know I mean I kind of go down the black hole, and I have to have someone pull me out of it. But what I did early on with Sterling, I said, Sterling, I give you permission to bust my chops when I'm not holding up my end of the deal, because he pushes me. Hey, listen, you got a meeting this week. You got a meeting you got a meeting set up this week. I mean, I gave him permission to do that, and that's worked out well. Sometimes
I asked for permission too, right? Yeah. It's
yeah,
all good.
but that's been great that we work together and that we push one another.
Awesome. Yeah, that's one of the reasons. I know, you know, people are joking, let's get through this webinar, get back to tax prep, but that's one of the reasons that we went ahead and did the webinar now, is because there's an opportunity to lean on one another, especially the CPA in the midst of that black hole, leaning on the financial advisor or the advisor side of things during busy season to help nurture the relationship with the client when maybe the accountant isn't, you know, in the right state of mind to do that. So on to our next question. We had a couple people kick off the webinar in the chat with their biggest issue being finding clients who need tax advisory, at least in their part of the country. Missy kind of hinted that that can be a problem in Utah. And then someone else said, yeah, that's the hardest part of my challenge, is trying to tell tax advice, I suppose, when you can't find people that want it. How did you find your tax advisory clients? Yeah, I know this is a loaded question. I'm sure you got, Stephen, I'm going to start with you because you're giggling.
I'm just laughing because when we go through the proactive planning diagnostic process, I don't think I've ever had a client say they weren't interested in hearing about ways they could save money in taxes.
Yeah.
So it's a little
these are
bit,
existing clients that maybe you hadn't even looked at it all in the past, right?
Right. And let me also say that one of the useful pieces from my perspective in terms of selling this tax planning idea is when you bundle that with the virtual family office, and when I get introduced as a new part of the team, it feels like it creates a logical break in the client's mind that says, oh, this is something different. Now there's more people working on my behalf. And now we're kind of nipping in the bud a little bit that question of like, if there was more you could have done, I thought you would have done it before. Like, weren't you preparing my taxes? And now it's like, no, new team, bigger resources, more stuff going on. I think we've got less pushback from the clients because we're taking this team-based approach and because we're introducing this broader, more holistic planning process than if we had just gone to our clients as a CPA, nothing new changing here, and then tried to sell a tax plan and then having the client wonder, like, why haven't you been doing this before? So I think that partnership actually kind of greases the grooves to change the paradigm. And then also the last quick comment on that is that the tax prep is a commodity for most people in their minds. So they view that as having kind of a price in their mind for what it's worth. The virtual family office does not. This is a new concept, a new value proposition. So even tax planning, they can't really quantify what the value is, but when you pair those two things together, it feels like the client is less inclined to say, I know what this should cost and you're overcharging me. It's more like, I don't know what this should cost because this is my first exposure. So tell me more about what this is. Oh, this is interesting. Maybe we should move forward.
Awesome. Missy, would you like to add to that?
Oh boy, you put me on the spot here again, huh? Right?
Well, you are on a panel. But if you feel like that's good, we know where
yeah.
move on.
I mean, Steven is my detail guy. He sends out an email and it's like this long, and mine's like 2 sentences. So
okay, cool. Well, you just let us know.
Guy.
Yeah, you just let us know if you want to add anything. No problem. So Sterling, Allen, what would you add to the convo about how are you finding these tax advisory clients?
Can I add to Stephen's what he was saying? You know, there's a paradigm shift as we help clients gain perspective, right? So I was just on a call with one of my accounting partners yesterday who has a relationship with a good friend. He's worth millions. He has a very successful business, and she talks to him all the time about trying to help him because he needs a ton of help. Okay, but the problem is he's a friend, and so he doesn't treat this relationship the way that as a professional relationship. And I'm going to relate this just to accountants and advisors, right? They see us one way, but to Stephen's point, when we bring this in, they start to see us in a whole different light, as we just need to shift the perspective. And part of that is, listen, I am not a financial advisor. I'm an advanced planning lead. I have a whole other entity that's completely separate from my financial services practice. And so that picture being painted by the client, we don't want them to paint the picture. We want to help them see the picture and illustrate it for them so they truly understand the value of what we can do as a cohesive, collaborative partnership.
Awesome.
Love it.
Okay. Real fast, Alan, did you ever feel like you had trouble finding tax advisory clients, or you thought that might be a concern?
My practice is primarily aimed towards business owners, and so I have a client list that can use the concepts that we're talking about here, but it was always the problem of delivering it to them. I know Missy and I, we go through required CPE every year, and I've always tried to go to CPE that was geared towards the high net worth individual, and I knew all this, but again, I couldn't deliver it. But with the ERT plan, again, you take it step by step with your clients, and it uncovers things that maybe you didn't know. A lot of things you probably already did know, but that's what's helped me in just looking at my existing client base, and just thinking about it, and thinking even the smaller clients, even looking at them and saying, well, what am I missing here? Is there something Is there something that I can help them with other than just tax compliance work?
Perfect. Thank you.
Yeah, very good. There's been a couple requests in the chat, which I think is a good one of, can you walk through just kind of quickly high level, actually a client circumstance? How did you identify the client? What work was done? What was the process? What was the results for the client? What was the revenue generated? Anybody here kind of share on the spot something that comes to mind there?
Even I know you got a good memory, right?
Steven's been nominated again.
You're up, Steve.
Well, so most of the clients that Missy and I worked on together were probably in the $300,000 up to maybe $700,000 of AGI range. And the way that we tried to do this at scale, Missy and I decided we were going to do a few basic strategies, and then we were going to put icing on top of that cake with some more advanced strategies that required a little bit more cash. And it was the coming together of those. So rather than building each new plan up from the beginning, we implemented things like the Augusta rule, corporate retreat, passing some of the SALT tax above that $10,000 limit through their business on the federal side, even though it's an add back on the state. So we would get some of that basic stuff done. And then we would add on things like leveraged charitable donations, where the client puts in 50 grand and they deduct 250,000 or up to half of their AGI. So most of our client dynamics were around those kinds of numbers. And typically we were charging probably between $6,500 and maybe $12,000 for the result that was being delivered, which was typically probably between $30,000 and $50,000 of net tax savings after you consider like the $50,000 in to get the $250,000 deduction, for example. And so on the whole, I'd say probably each tax planning engagement of a client of that size was probably worth somewhere between 12 and 20 grand. There were some bigger cases and some bigger stuff that we did and that I've done, but those were kind of our singles and doubles style kind of en masse numbers for what we were doing for most clients.
And if you think about that just for a moment, 12 to 20 grand of average revenue per client, and it sounds like you're being very conscientious about the amount that you're actually either helping them save in taxes, the overall value that you're delivering, and so you're earning or charging a fraction of that. So their client's winning. And then, Missy, can you add any detail on a client, let's say, that you ended up generating as a partnership between 12 to 20 grand in maybe 2022 or 2023, if you weren't working together on this client, what would that revenue have looked like for that client?
Oh, going back a couple of years, that's a good question, right? Again, a lot of these strategies that Steven's brought to me, besides, the Augusta rule and sales tax and all that kind of stuff, are actually new for me. So I wouldn't even have known them, what they were 2 years ago, 3 years ago, with the leverage asset donations and some of these other strategies that Steven brought to the table. So, I mean, if we could have been doing this now for 2 or 3 years, we'd probably be saving even more of our clients, because right now we have a of say a dozen. If we, started this with Steven a few years back, that's probably triple, quadruple the amount of numbers that you're working on, right? So it's really hard to say what we could have saved.
Sure.
A lot of these
I guess the question more so is not necessarily what you could have saved, but what would you have charged that client perhaps? I mean, is it a stretch to say maybe that was $1,000 revenue client?
God, just like a tax planning.
Yeah.
Yeah, you're probably looking at $500 to $1,000 rather than.
So $500 to $1,000 for a client, and that same client now represents 12 to 20,000 on average. Is that what I'm hearing?
Right.
With the work you were doing,
Right.
Jackie, is that double or more? I mean, you're the accountant, but $500
That's
to
exactly the
$1,000.
experience I had in my own firm. So
it's a little more than double.
Yeah, I mean, it tends to triple to quadruple the revenue for those clients. And then naturally, you tend to kind of let go in various ways of the clients that aren't a right fit for this service, because we hooked everyone into this webinar with how to double profit. But at the end of the day, it's in our hearts how we want to help these clients. And that's what really matters, right? Is how much we're helping those clients and the results that we're able to get them. So that's super cool. I love it.
Mm-hmm. Luke, no, that's probably AUM fees is probably in addition to that 12 to 20, Stephen, I'm assuming that'd be separate from that.
Yeah, that was
and
all tax planning.
And Darlene, I'm sure they do split that 12 to 20,000 between the two of them. Do you mind sharing how you split that, or?
I don't care. I think we've got a third guy in ours, right, Steven? So it goes, I can't remember what the payout is on the tax planning stuff.
Yeah.
Depends maybe on the specialists or who's involved as well, but it's probably between the two of you fairly.
Close to 50-50.
Yeah. At this point, it basically is 50-50. We had another partner that's kind of taken a step back. And so conceptually, though, I think the right framing is as long as it seems fair to both parties, there's a 50-50 split on new revenue streams that are being generated because of the partnership. And so that's how we've generally treated it.
That makes sense. And then if you have a legacy revenue that either party had from that client prior to the partnership, you're keeping the legacy revenue, you're splitting the new revenue 50-50. Love it.
Mm-hmm. Right.
Alan or Sterling, is there any specific case that you guys would want to talk through at all?
We had, we had some very similar cases to what you just described, Stephen. So we had, 6 to 8. I mean, I think part of the identification process we were talking about earlier is how do you find these clients? I believe part of this is helping to identify the clients. And so, when we're talking about tax reduction strategies specifically, then, there's of course certain thresholds in regard to AGI and maybe at the business level, what have you, as far as revenue and such. But one thing that I think it's important to understand here, and I saw a question that someone was asking, who's ERT or what's ERT? Elite Resource Team is Anton Anderson. He's the CEO, and in that group, what they do is they help advisors like myself to learn how to bring this process to an accounting firm. And so the actual model is a VFO, virtual family office model. In those areas we've talked about, it's important, we can get lost in tax planning. Tax planning is incredible. Of course, we got to do tax planning, but it's not always a focus. And I think when we lead with tax planning, sometimes they get so focused on tax planning and tax reduction as if we lead with that. And that happens year end, of course, because there's this major focus to reduce tax. But if we don't help them understand that we're a team working on all areas that you need, and I think it's important to help them understand that we need to engage as a team first. And that can be done at a very basic level. It could be $300 a month. It could be $600. It could be $1,000. It could be a couple thousand, depending on the level of priorities, how many things that this client wants us to address as a team. That we call that a proactive planning fee. This is just an engagement. Us working together as a team on their behalf. No implementation included in that fee. No tax strategies, no compliance work, no specialist fees, nothing other than us engaging as a team. That's really important for everybody on this call, I think, to understand. If we do that right, and even if it's just a simple $300 a month engagement, now we've engaged as a team, we can address their concerns. And when we get to tax planning, we are working and we're engaged. When we get to tax planning and we can really be effective. And that $600,000 to $800,000 client, I think that we've had several of those, very similar to what Stephen talked about, very similar strategies. We also had one other client that we were able to save. That client alone was, I think 2023, we saved them 1.1 million because we did a late filing. And then in 2024, I think we saved him 2 million.
Yeah.
So that one particular case, several strategies. We did some at the estate level because we've done a lot of planning for this client. So there's an irrevocable trust that we did some planning at the trust level before it came to him because it's a pass-through, of course. So he's paying, he gets about 6.5 million of income, but 55% of his actual distributions that he gets as a shareholder of a private corporation go to his irrevocable trust. and he was paying tax on all that revenue or all those distributions. So we cut off a lot of that by doing some planning at the trust level first, and then we did a lot of planning at the personal level. So, and it's just a living, breathing case. I mean, we're meeting with this one client. How often, Alan, are we meeting with?
At least, you know, once a month, sometimes twice, three times a month.
Wow.
With 3 of us on the call, along with the client at least.
Yeah,
Sometimes
his team.
Yeah.
We have 15, you know, actual specialists or so that we have wrapped around this one client that we coordinate.
Yeah. Yeah, that's amazing. I'm seeing, Carrie, I see your posts and a couple other chats. I know we're getting close to the top of the hour, and there's way more questions that we didn't necessarily get to, which I love the interaction here. So thank you for all the questions. What I was thinking, Jackie, maybe we could have Sarah share links in the chat. And if folks have questions that they feel like we weren't able to necessarily get to, or they want to continue the conversation, we'd welcome you to schedule a call with us, and you know, either us or our team, we can jump on and hopefully get to some of the questions that came up today, or talk more big picture what this might actually look like and how it could help you in your individual circumstance. I think what I'll attempt to do here is quickly, if like 1 to 2 sentences from each person, just give me advice for anybody on the line here today. Your kind of last, what would you want to leave them with? And then I'll take 1 minute to kind of give you some closing thoughts, and we'll try to wrap up close on time. Just 1 or 2 sentences, last piece of advice for anybody on the line that's thinking about moving in this direction of truly offering more value to clients through tax planning and this overall virtual family office. Stephen, you're up.
Okay, number 1, who, not how. So
Love it.
if you are having problems in your practice that you've wanted to change for years and you haven't been able to do it, there's probably a relationship you're missing. And that could be a relationship with Jackie and the TaxPlanIQ team. It could be a strategic partnership like Missy and I have, but there's probably a relationship to focus on. And then number 2, if you don't put forth some effort to get off what we would call the tax season treadmill, or whatever kind of hamster wheel that you're on, you're probably not going to get off it. So at some point, you need to make a move from a commoditized service that everyone else is doing, red ocean, it's bloody in there, everyone's fighting for business. You need to move into a new space with a new value proposition. And doing that little bit of work in 2 to 3 years will dramatically change the trajectory of your career and the way that you end out in terms of work-life balance, revenue, and fulfillment.
Love it.
Good stuff.
Missy, any
Yeah.
1 or 2 closing thoughts?
Stephen is great. Again, the value add that you give to your client by doing the tax planning is just, you know, you can't put a price on it. We picked up a client that was in this model late fall last year, and they were just blown away by, you know, the stuff that we presented to them and the reviews that we got from them. I think they've even referred clients to us. And again, in 3 months, they couldn't have been happier with the whole team concept that we brought to them.
Love it. It's wonderful. Alan?
I think, again, what the ERT system has brought to me is just all these things, all the resources that are out there with ERT. Now I have a method to bring it to all my clients, and I have a relationship with Sterling that, hey, we can deliver it now, whereas, you know, and we do it in a structured way, and that differentiates me and my market from other CPAs that have been here sometimes a long time, but it just differentiates us as CPAs who have those kinds of resources. No one else has that in my market, certainly. So that helps a great deal.
Sterling, any last words or piece of advice for anybody on?
So ask yourself a question. are you exhilarated by what you're doing in business? Are you absolutely excited about what you do and what you're able to do for your clients? I'm, you know, I use the word jazz all the time, and I get called out by millennials, and you know, we're so you said jazz. Are you kidding me? No, I am so excited about what I'm doing. It's so fun, and if you're not excited, why not? And listen, there's a swell happening, and whether or not you want to recognize it or you see it, it is literally just rising. And if we're not on that wave, if we don't do what Stephen was talking about, get off that hamster wheel, literally we will become irrelevant and outdated. And AI is just making that wave even larger. So we have to change. If we don't, we will, you know, we will be lost in the shuffle. So I love it. Let's, yeah, I'm grateful to be here, guys. Good stuff. Thank you so much.
Appreciate it. Jackie, was there any last comments or thoughts from you?
Oh, I have a lot, but yeah, I guess I'll try to keep it very short. So how do you double your profit in 2025? We pretty much gave it away in the first, I think, 5 minutes, but it's essentially by working together, that financial advisor side and the accountant side. It's a match made in heaven. So if you're looking for that relationship this Valentine's Day, then you've got ERT that can help you with that. If you're looking for the technology and tax advisory technical skills, that's where TaxPlanIQ software comes into play. So over to you, Anton.
Love it. Yes. I mean, we are doing our best here to truly walk our talk, which is collaboration, right? So you have both companies here coming together, and Jackie and I representing both companies. You know, half of the heart on Valentine's, is that a little bit of a stretch? Or I think that's kind of cute. Truly believing so much in the opportunities and the collaboration behind it. There's an amazing quote, which is, if you want to go fast, go alone. If you want to go far, go together. And I have no question that any of these four individuals on the line here today would be successful with or without the partnership, with or without Jackie and myself. They could do it alone, they go fast. But truly what they're building is much, much bigger than what they would have alone. And so I think as we're landing the plane here today, I would just encourage everybody to be open-minded to the power of collaboration, regardless of how many relationships you think you have already, regardless of whether or not you were burned in the past, regardless of what your stereotypes are of the others. I'm telling you, there's a growing group of people like Alan and Missy on the CPA side, like Stephen and Sterling on the advisor side, that truly believe in collaboration and can help not only double your profit in 2025. I mean, that's a nice mark to hit. But the excitement that Sterling has and the energy that Alan and Missy have and the problems that they are solving together is just so far above and beyond the most, I think, important and rewarding part that comes from delivering more value to clients. So thank you, everybody, for your time today. I really appreciate it. I'm so glad, Jackie, that we did this panel. One is it's always fun to be on with you, and thank you for your time. And other, you know, Stephen and Alan and Misty and Sterling, thank you guys and gals for being on with us today, especially the CPAs taking time away from tax season and all the amazing feedback. So everybody on, we hope to have a chance to talk with you, answer some additional questions, see if there's anything that we can do to be valuable to you, whether it's TaxPlanIQ or Elite Resource Team. And with that said, we can wrap it up here for today.
All right.
Thanks everyone.
Everybody.
Appreciate it.
Bye.
Thanks.
Okay, guys.